So there's two things that you need to work on if you don't want to lose money in the stock market. And this is being able to read financials and working on your psychology. So guys, let me know down in the comments below, have you ever lost money in the stock market? And if so, why did you lose money? So guys, if you are new here, my name is Susan Velez, and on this channel, we talk about making money, saving money, investing money, and taking care of our health, especially if you are late to saving for retirement like me. So guys, on this video, I want to share with you guys two things that you need to focus on. That way you don't lose money in the stock market. Now, like I said, whenever you are investing in the stock market, there's always a possibility that you're going to lose money. But for the most part, if you listen to these two things and implement these two things, guys, there's a less possibility or less chance for you to lose money. So let's go ahead and jump in with these two things. So the first thing that you have to work on or have to really learn is that you have to learn how to do the financials of a company. This is especially important if you are investing in individual stocks. If you are investing in individual stocks, you have to learn how to read the profit earnings. You have to listen to the earnings reports of a company. You have to understand whether or not the company is profitable and when's the best time to enter into that company. You don't want to buy too high on a company. You want to make sure that you're buying low. That way, when the time comes to sell that stock or start taking profits, that you're selling at a high point, guys, because a lot of people make the mistake, myself included, where I've purchased a stock thinking I'm getting a great deal. And the truth is that I got in too high. And so when there's a red day, a lot of times I am in the red on that stock because I bought in too high. If you buy in low enough, guys, especially if you are buying individual stocks, it doesn't matter what the stock market is doing, then chances are you're still going to be in the green because you bought in at a really good point. And so when the time does come, you're going to be able to make a good profit. So I bought in on SoFi. This was like 2-3 years ago, and my cost basis is $4.72. So since I bought in at $4.72 or was able to lower my cost basis by dollar cost averaging into SoFi and getting my cost basis down to $4.72, I've been in the green the entire time, even when the stock itself has been having a lot of red days, because I got in at a really good price. So as long as that company does really well in the future, which I've been keeping up with the fundamentals, and I think that that stock will do very well in 5 or 10 years, then I have a good chance of making some profit on that. So if you don't know anything about reading fundamentals, or you don't feel comfortable investing in individual stocks, and you don't want to lose a lot of money, then you definitely don't want to consider individual stocks, because according to a lot of experts, they say that a lot of people won't be able to beat the market. So you might be better off just doing index funds and ETFs, guys, which a lot of the times, guys, that's where I put a lot of my money, is into ETFs and index funds. With ETFs and index funds, guys, you can decide whether you want to invest in the S&P 500, which is the top 500 companies of the United States, or if you want to invest in a total stock market, which includes all the companies in the United States that are in the fund. That way, that mitigates your risk and you don't have to worry about picking the right stock. Because if the company does not meet the criteria for being in that index fund or ETF, then the ETF or index fund self-cleanses itself and replaces that company with another company, so that you never have to worry about losing out because you're invested 100% in an individual stock. So just know that there are tons of different ETFs and index funds. So if you're investing in different ETFs, guys, all you have to do is find out which sector of the ETFs you want to go into. Do you want to invest in semiconductor ETFs, real estate ETFs, financial ETFs, or whatever sector that you want? You have to do the due diligence of what you think is going to be beneficial in the future. What's trending? What do you think is going to be profitable in the future? And if you don't want to do a sector ETF, guys, you might just want to invest in a total stock market, just like I did with my Roth IRA, because then you don't have to try to see which niche or which sector is going to be profitable in the future. And therefore, learning how to read financials or trying to determine which sector is going to benefit you in the future is not as important as just putting all your money in a total stock market or the S&P 500. Then you just have to worry about dollar cost averaging on a regular basis. All you do is you set up either a automatic investment routine or you push the money over manually, and your dollar cost averaging, meaning you're buying the same amount every week, biweekly, pay period, monthly. Every time you have extra money, you're pushing money into that investment and you're buying the same amount no matter what the stock market is doing. If it's having an up day, it's green, you're buying the same amount. If it's red, then you can continue buying the same amount. But if it's red, guys, the one thing that I've been doing is that whenever the stock market is red, I try to push more money over and buy more than I usually do when it's green, because when it's red, you're getting that stock at a discount. So you want to make sure that you're buying as much as you can on a red day. And even if you can't buy more, guys, if you can dollar cost average and buy on red days, then just know that you're buying more for your money. So you're getting more bang for your buck. And I know a lot of people are hesitant to buy on red days because they think that they're losing money. But the truth is, if you look at a pair of shoes, guys, and those pair of shoes are not on sale, would you rather pick up those same shoes on a sale, knowing that you're saving money on the front end? I know I prefer to buy stuff on sale. So whenever the stock market is red, I'm always trying to buy a little bit more than I do on a regular basis. And this is one of the reasons that I try to leave a little bit of money on the sidelines. I know a lot of people say that you shouldn't leave any money on the sidelines. You should have everything that you can invested. And this is true. I know that it's so important to have my money in the stock market because time in the stock market beats trying to time the stock market. But I do think that it's important, especially for me, guys. You can do whatever you want to do. I try to keep some money on the sidelines. That way, when the stock market does take a dip, then I am able to have a little bit more funds on the side that I can invest a little bit more than I do on a regular basis. So that's up to you guys. That's one of the methods that you have to understand. Do you want to spend your time learning financials, or do you just want it to be more hands-off where you're investing in an ETF or an index fund? So you have to determine that. And guys, you can't let anybody tell you what to invest in, not even a YouTuber like me or anybody else. It's your money, and you have to feel comfortable with where you're putting your money, and you have to be able to sleep at night. So when you're making the investments and you know what you're investing in, it's going to be a lot easier for you not to panic sell when you see that the stock market is all red. And that brings me to the number 2 issue on how not to lose money is you have to work on your psychology of investing. So when it comes to money, guys, we all suffer from loss aversion. We will do more to not lose money than we do to accumulate money. So if you've ever lost $10 before, guys, you know how hard it can be, how hard you can be on yourself too, that you lost money. Nobody wants to lose money. It's never fun to lose money. But when you gain money, guys, then you feel great because you feel like you've done right, you've accomplished something, and you feel really good and proud of yourself. So when it comes to investing, guys, psychology plays a huge role on everything, especially if you are watching the news. You'll see all these headlines that the stock market is doing really well, or the stock market's taking a tank and it's seen the worst drop since 2022 or whatever, guys. But you're going to read all these different headlines about the stock market, whether that's good or bad. But the news loves to instill fear, and they know this works because one of the things that these videos rely on, or the media relies on, is clicks, because the more that you click on their YouTube video or their news articles or whatever, they're making money with ads. You see them all the time, guys, where people make money with ads that they're showing you, whether that's through a website or a YouTube video. That's how they make their money. They make money. The more people that click on their videos or their websites is how they make money. So that's how the internet works, guys. The more that you can get people to click on your websites or videos is the more money you make. And unfortunately, the best way to do that is by instilling some type of fear or coming up with a headline that causes you to get fearful. So if you're watching the news or you're listening to people talk about or how bad the stock market is doing, and that instills fear in you, it's going to cause you to panic sell. And then you're going to get hit with taxes, especially if you haven't had the investment for over a year, because you're going to get taxed differently than somebody who's sold their investment in less than a year. So if you do need to sell something, guys, make sure that you hold on to that investment for at least a year. That said, if you are in an individual stock and that company is getting ready to go bankrupt, well, then you have no choice but to pull out your funds before you lose everything. But for the most part, guys, I think a lot of people will do a lot better and create more wealth if they go into it investing and thinking as a long-term investor, because if you invest in an ETF or index fund long term and not worry about selling, you're going to be able to create more wealth than somebody who's constantly trading. So if you're the type of person who is fearful about investing in the stock market and you think that you're going to lose money and you worry about losing money and you think that you might panic sell when you read bad news, then stop watching the news, stop reading the headlines, and put your money in a safe index fund or ETF, because that's one of the best ways to prevent you from panic selling when the stock market does take a dip. Because guys, regardless of how diverse you are, you're going to see a lot of fluctuations in the stock market. It's going to go up and it's going to go down. I mean, it can be one of the most volatile places to put your money, but it is one of the best places for the average person to create wealth. But you have to understand that investing is emotional, especially when it comes to you're trying to catch up for retirement. You don't make a lot of money and you're putting all your money or a big majority of your money into the stock market. Nobody wants to lose money, but remember, the goal of investing is to get wealthy. The goal is to buy low and sell high. You don't want to buy high and then sell low. And the only way that you're going to do that is if you panic sell, guys. And you got to remember, guys, that even though the stock market is red and it says that your portfolio is down $500, you're not actually down $500. That's unrealized. The only way that you actually lose that money is when you sell, if you sell. So make sure that you take the emotion out of investing and just realize that investing is just a tool to help you get to where you want to be. So you have to do everything that you can to try to keep your emotions out of it and understand that this is just one tool that you can use to build wealth. So anyway, guys, I just wanted to share these two things that you need to work on in order to not lose money in the stock market. Like I said, whenever you invest money in the stock market, there's always a possibility that you're going to lose money. And there's not a 100% possibility that you're going to become wealthy. But it is one of the best ways for somebody like you and I to have a chance to create wealth. So anyway, guys, if you enjoyed this video, give it a thumbs up. Click on that subscribe button so that you can be notified whenever I put out a new video. And until next time, guys, I will talk to you later. Have a great day. Bye.